The combined loss today and yesterday is now 850 points. The Dow's off 507 at this moment. Losses all across the board. Jack Hough, senior editor at Barron's magazine, with us now. I want you to give advice to our viewers, most of whom are long-term investors with money in this market. Advice, please.
Well, they've heard 1,000 times, don't panic, just wait it out, stocks go higher over the long term. I tell people, if you're someone who might panic, better to panic earlier rather than later when everyone is scrambling to get out. Look, it's the end. We're 10 years into a very long expansion. We don't know that recession is right around the corner, but we know that these economic indicators are weakening. The manufacturing numbers that we got yesterday were not good at all. We're looking for cracks in the jobs numbers, which is what's really making investors nervous here. Eventually, bull markets come to an end, and if you're thinking that you have too much in stocks right now because they've done so well and you want to raise a little cash, raise a little cash. Don't go crazy. You don't get totally out of stocks, but raise a little cash.
Look, we've got this big indicator coming tomorrow on the service sector. On Friday, we've got jobs. I mean, are we looking towards maybe a recession on the horizon if those two reports are negative?
You know, the Fed's yield curve model last I saw said a 38% chance of a recession inside the next year. Okay, I'll buy that number. That sounds, you know, that's also a better chance than not that we avoid a recession over the next year. We can't say the short-term direction of the market. The question that remains to be answered is not, is this economy weakening? It is, can we do something about it? I've been arguing that the Fed put is kaput. We don't revive this economy magically just by lowering interest rates. They're already low. We're already deficit spending. We're already stimulating like crazy.
Okay. Now, I want to bring up the subject of Bernie Sanders and Elizabeth Warren. Round the table, we've been discussing what's going on here. First of all, Bernie Sanders has he's cancelled all events for the foreseeable future.
Until further notice.
Until further notice, thank you. He's had heart problems. He's been in the hospital. He's still in the hospital. He's conversing, but he's had 2 stents put in him. Okay. In my opinion, Jack, that enhances the prospect of Warren, Elizabeth Warren, getting the Democrat nomination. And I think that's part of what's really worrying Wall Street.
Yes, and I'm not quite there with you. I'm not going to pin this decline today on Elizabeth Warren.
No, nor am I, but it's part of it.
However, she's obviously riding high in the polls right now, and we've heard a lot about her plans to tax the rich to pay for some of these plans. What I would like to hear more of from her is how that won't hurt the economy, how important growth is to her, how we're not going to, if we're chasing the very rich with our pitchforks when we've chased away all the rich, how we're not going to turn those pitchforks on the upper middle class, how we're not going to become very anti-big company. I happen to make my living from a big company, thank you very much.
She is looking good. She is looking good.
I think she's looking pretty good right now.
We've heard virtually nothing from Joe Biden. He's been dead quiet. And now we've got Bernie Sanders in the hospital. Who's left among the Democrats but Elizabeth Warren?
Last I heard from Joe Biden, he was going on about record players or some other thing in the debate. It was not inspiring, to say the least. So I think when you look at this field right now, Elizabeth Warren is the name that stands out.
Impeachment, Hong Kong, a declining manufacturing sector, numbers coming up tomorrow on services, Friday on jobs.
That's a biggie.
Add it all up and throw in Elizabeth Warren as a possible nominee for the Democrats, and you got a 500-point decline. Am I missing something here?
Yeah, well, earnings, too.
Earnings. Yes, as
down.
Gary Kaltbaum just said, earnings are the baseline. Profits are the baseline for stock prices. And because of that decline in manufacturing, the analysts are lowering their profit forecast in the future. You're following this.
Yeah, earnings are terrible, too, by the way. Throw that on the top. But
that's a big deal.
That is a big deal.
They're going to start to get a little bit better probably in the fourth quarter, because the comparisons will get easier in the fourth quarter and going into next year. We might get 5% profit growth. I don't know if that makes you want to jump up and sing and dance, but we might get 5% earnings growth next year. It could give the stock market another leg from here.
What a day.
Yes, indeed.
What a day.